Good morning, trading world. It is Monday, November 8th, 7:25 a.m. And this is my pre-market outlook. Before I get into today's outlook and map out today, let me go back and address a couple people. I know I have been calling November 5th as the start of a possible pullback or correction. So first, let me go back and explain what I mean by start of a pullback or correction. Because I say start, this doesn't mean that November 5th, this is the day that we just topple over and we have a bunch of straight down days. This is not what I mean by start. First, let me give you the definition, or better yet, Friday's formation or pattern was what we call a blow-off top. Let me give you the definition of blow off top. Let me see if I can get it up here. All right, here we go with the definition of a blow off top as quoted from Investopedia. A blow-off top is a chart pattern that shows a steep and rapid increase in a security's price and trading volume, followed by a steep, rapid drop in price, usually on significant or high volume as well. The rapid changes indicated by a blow-off top, also called a blow-off move or exhaustion move, can be the result of actual news or pure speculation. All right. Let's go down. One more thing we're going to take from this article on Investopedia. Blow-off tops occur in all markets and can impact stocks, futures, commodities, bonds, currencies. A blow-off top indicates that a security's price is about to fall. This does not mean the price will fall immediately, though. The rising part of the blow-off can last weeks. The early part of the rise may look exceptional with big daily and weekly price gains, yet sometimes it still may continue to escalate for several more weeks. All right, this is what we experienced on Friday. And with that being said, now that I have definitions out of the way, let me repeat. Tops are a process. I don't expect us to just topple over into a number of down days yet. However, this begins the fight between bulls and bears for momentum. In my eyes, we get the gift of two-sided trade. Expect to see strong days in both directions at times. These next couple of weeks will be difficult to handicap. Remember, the market just went through the last couple of weeks proving that risk forecasting is growing extremely inefficient. So that's the reason I'm saying that these next couple of weeks are going to be kind of difficult to handicap. And at this point, you have to kind of lean on internals or indicators to kind of give us the clues on these reversals, because things could happen pretty sharp over the next couple of weeks. Like I said, we're going to get two-sided trade. For someone who's a contrarian like myself, we like trading, looking for the reversals, the clues to the reversals. It's a good thing. For those of us that like trading trend days or like trading in one direction, it's going to be bad. So those are a couple of things that I wanted to highlight before we got into today's scenarios and mapping out what we're looking for today. Again, like I said, the start of a pullback or correction. Sometimes it doesn't look like a pullback at all, but you have to understand the phases of the market and being able to see exhaustion, being able to understand certain clues. And really what it comes down to, if you're an intraday trader, like myself, I am an intraday trader and I do venture out and do some swing trades. When it comes to the intraday part of trade, it becomes really key to go out and get that 30,000 foot view, going to that highest time frame, which I showed you last week, going to the weekly time frame. Because remember, the reason why we're still kind of climbing up, we still haven't cycled completely on the weekly time frame. So until we cycle completely on that weekly, we're going to continue this chop. And the more we get to this overbought phase or begin to get over into that part of the cycle on the weekly, the more we see these dangerous 2 sigma moves where we're going up just fine one moment and then the next moment we're down 20 or 30 points. So you have to be very cautious during a time like this because things move sharply. All right, so let's get into today's scenarios. Give me a second while I put the first scenario up on the chart. All right, here we have scenario number 1, which has a 40% probability of happening today. Today we get a range day where we establish a high, we establish a low, and we pretty much bounce between those two majority of the day. Coming in from where we are now, I haven't looked at this. I'm not looking at a smaller time frame right now, but we can start off to the downside. We can start off going up. It really doesn't matter. If we start off going up, 470, 471 is still resistance, 470 being the first resistance level, and then 467 being the first support level. Don't be surprised if we overshoot those levels by a little bit, bursting into part of the 471 area. And then to the downside, we could really overshoot and see close to 465 area. So just want you to look out for that. But I'm looking for the first leg to be up. We get a minor little kind of fake down here, which might be to 467 area, but we get during the meat of the morning, we should see up day, which is that 9:45 to 10:45 time frame. We should see that leg up during that time, and we hit resistance and kind of bounce up, retest, and then go again back towards support. So that's what I'm looking for today. That's going to be the game plan, and how I plan to play that if we start off to the upside, or we reach the support of 467 and internals are positive, your indicators are positive, I'm going to look to apply a call that expires today, or a few calls for me that expire today. I'm going to look for a 50 delta, or as close as I can to a 50 delta call on today's expiration option. And I'm just going to try to catch the first part of that leg. Whenever we meet or get anywhere near the target up here, 470, I am exiting all of the positions. At this point, I do not plan to play. I don't plan to see and wait to see how much more we can get. Once I get close to my target, take profits. There are truly more risk to the downside than up. So with that being said, anytime I take a position long, anytime we get close to that target, I am taking all profits. I'm not playing around. Now, on the downside, this is where you have room to kind of play. Because once we reach this target and I see my indicators or internals flip around or do a reversal and give me clues that we're getting ready to now try to go find support on this range day, I am going to take the exact opposite position. I am going to find a 50 delta put on today's expiration. And actually, this is where you have room to kind of play around a bit. Because if we hit that 470 or a little bit above that 470 area, I may reach out and grab an option with 7 to 10 days of time on it. And look again with that 50 to 65 delta option and let it play. If you're going to do this the way that I will be doing it, I'm going to take a number of these puts at this level. And when I say a number, I'm doing multiples of 2. So depending on your account size, you may do 2, you may do 4, you may do 6. I don't know what your account size is. But usually I try not to put at risk more than 1% of my account in any given move. So if I do multiples here with this put, when we reach the target, I'm going to take the first half off. Once I take the first half off, the rest you can let play, because like I said, there is more risk to the downside than there is up. So which means there is more of a possibility for us to overshoot much further coming down than it is going up. So I would let it play here, because there's a possibility that we can overshoot toward this 465 area. We could reach somewhere right here to 465 and beyond. I never put it past. But that's the reason why I would let the rest of that position play. So that is our first scenario today. All right. The next scenario, I'm going a little bit out of order here. I hope this doesn't confuse anybody. But the next scenario is what's going to be called a trend up day. Things that we're going to be looking for here is that before open, we have to climb up a little bit more so that we open gap up, which is to be a significant amount above Friday's close, which was 468.52. And if we have gapped up, then we'll get a half-hearted try to kind of close this gap back to 468.52, but we'll find support before we get back to that area. And from there, that's where we take off with a nice, decent move up toward this 470 plus area. And this one, don't be surprised if we overshoot up into the 471 area. And once we get to that area or midday, we'll see some chop and possibly a slight pullback, but not much, not anything to be concerned about. And then going into the last part of the day, we'll see another push up back into that 470 area. That's going to be a trend up day. I'm giving that a 25% probability of happening today. Another thing that I want to talk about, when you see these probabilities of happening, notice today's probabilities are pretty close. The closer these probabilities are, the harder it is to handicap the risk on the day. So this is what I kind of spoke to earlier about the markets becoming extremely inefficient. It gets cloudy. It's harder to see. So that's why the probabilities of these days are getting closer and closer together, because it's getting hard to kind of see the signs clearly and tell them apart. All right, so that is the trend up scenario. So let's go to the next scenario. All right, the last scenario for the day is what I call a rounded reversal day or change day. Friday was what I like to call a super change day. So on this rounded reversal or change day, from before the open this morning, we're going to see a build up, an energy to build up. And I need to look. I haven't even looked at the, as a matter of fact, let me look right now at the calendar to see whether there's anything specific happening today. There's no, significant news event. There's a reserve chairman happening, Federal Reserve chairman. I guess this is where he's going to give opening remarks around 10:30. That could be something decisive that could probably make the market move on. So we have to be careful around that 10:30 time frame, Eastern Standard Time, because that could be an event that could kind of propel us up or propel us down, which is more reason of why I see a range day happening today at the time this event is taking place. But on this rounded reversal day, we'll see a build up and we will take off, not looking back, and we'll go towards that 470, 471 area. And once we reach that midday time frame, we'll see chop across the midday, and then for the second half of the day, that move that we've seen up, we'll see just as powerful or even a more powerful move down. That powerful move down is probably going to take us back toward the 467 area, but don't be surprised if we make it to that 465 area on a rounded reversal day. This scenario, I'm giving a 35% probability of happening. So if you're looking at it, the range day has the biggest probability of happening, then this rounded reversal day, and lastly the trend up day. So those are the scenarios for today. The rounded reversal day, I'm going to play pretty much the same way as the range day, looking for intraday trades using calls on the first half of the day at a 50 delta with expiration of today, and then again if we're at that 470, 471 plus area, it'll be your choice. I'm just going to kind of see how things look once we get to that area, but I would probably use a longer term put option with 7 to 10 days on it at a 50 to 65 delta to play the downside of this. And again, I'm taking half of the position once we reach the target. And the place where I would be exiting those positions are going to be that 467 area. And I would leave the rest on to see if we can get a drop either through the overnight or tomorrow back down into this 464 area. So that's what I would be looking to do. It is a dangerous play because we're in this choppy environment where, you know, there's no telling what could happen because, like I said, the bulls and bears are fighting for momentum. So we could come in tomorrow and be back up around this 470 area. Almost as likely as we are to come in and be down below 465. So this is trading. Nothing is 100%. I just try to be prepared for the three highest probability outcomes that I see in the charts. And by doing that, I have to assess the risk. And in this game, if you understand and you prepare for risk first, that's the key to survival. So I'm going to close today's pre-market out with, again, always know your risk. Wishing you the best of luck in your trading. Have a great day.